Hello everyone, welcome back to the channel, your number one source for income-oriented investing. And as you could see from my hat and my shirt, by the way, we are excited to be almost ready to launch our store, our merch store, where we will have, of course, all kinds of merchandise, hats and t-shirts, etc., all kinds of stuff with our logo and other pretty cool designs and funky designs, which I think you'll enjoy. So I guess the cat's out of the bag. So right now we are actually doing some quality testing, right? I don't want to put anything online without actually checking it out first because I don't want to put cheap stuff out there. So very excited, that's coming up soon. So stay tuned for that. You'll enjoy it. So in today's video, I want to talk about the Great Eight. So what is the Great Eight? Well, these are eight income-oriented ETFs listed on the Canadian market. So today's video is going to be all about the Canadian market, but I might do kind of the same thing on the US market as well eventually. So these Grade 8 are, income-oriented ETFs, which I feel could be really good buy and hold forever core foundational positions in your income portfolio. Now, which ones you choose is really up to you. Of course, there's going to be a lot of overlap between these eight, but they all eight of them have very particular characteristics in common. They're diversified. They all use a little bit of leverage. They all pay monthly. They all have very consistent distribution. So again, these are the eight, or the Great Eight, where I feel could really make up the core building blocks of your foundation of any income portfolio. And you could make them, them not just core elements of your income portfolio, but exclusively just these if you want to avoid, sectors, more risky sector specific ETFs or even single stock ETFs. So let's go through these Great Eight together. I'm really going to do a little deep dive and compare each of them. You'll know and recognize a lot of them already, but I'll try to really do some, what's the difference between them, which ones are a little bit more conservative than other ones. So I think this is a good video if maybe as a refresher, or if you're a newer income investor, you're trying to build your portfolio, you're thinking about building your portfolio, which funds you want to have as your core positions, this is a good video. So let's get started. All right, everyone, let's go through the Great Eight together. I did put them in a particular order, which will make more sense as we go through the video. So again, just remember that, the premise behind this video is to really give you what I feel, this is my personal opinion, eight diversified, enhanced, all covered call ETFs here that you could use to build your foundational income portfolio. So the first three really focus on the US, and you guys know that this is kind of my favorite way, or my favorite style of investing vehicle: index-based, US focused, with covered calls and a little bit of leverage. So of course we're going to start with HYLD, or HYLD. This is the Hamilton Enhanced US Covered Call ETF. So this one needs no introduction. We've talked about it a lot on the channel. This is pretty much what I like to say is S&P 500. I'm doing quotes here. This is an S&P 500 style ETF. It's not exactly the S&P 500, but it's trying to track the S&P 500. The sector mix is a little bit different. It actually has a bit more healthcare, a little less industrials. It also has a tiny bit in fixed income. It's a tiny bit more in real estate. So if you scroll down, you'll actually see the sector mix here. So of course, this is an all-in-one that holds other Hamilton ETFs. You'll see the breakdown here, but here's the sector breakdown, which is really what we want to see. And you'll recognize that it's more or less, it looks like the S&P 500 sector breakdown. It's not all 500 stocks. Think of it like a concentrated version of the S&P 500. So, I recently did a in-depth Q&A with Nick Picard, who's the chief options strategist. You could check out that video to learn, really dig deep into how Hamilton ETFs thinks about covered calls. But this is definitely on the list. You guys know that this is one of my personal core positions. I really consider this pretty much an S&P 500 ETF. Fantastic yields of approximately 12%. They could vary. And this one, the special thing about it is that as of the beginning of this year, it finalized its changes and it's all in-house now. So this ETF is completely different at the beginning of this year than when it first came out in 2022. I think it's much better. And if you just look at the total returns, as of today, October 1st that I'm filming this ETF, and it is a Canadian currency hedge ETF, it's actually beating the S&P 500. That's right, it's beating the Vanguard S&P 500 VSP. Not only that, but even VFV, last time I checked, or it's very close, if not identical to VFV. which is the Vanguard S&P 500 without the hedging. VSP is with the hedging. This one has the hedging, so we got to compare it to VSP. It's outperforming it, which is absolutely incredible. Obviously, this is a fantastic ETF for to make really a cornerstone or a foundation block of your income-oriented portfolio. Diversified, consistent monthly dividends. It has it all. It has everything you need here. Perfect to live off of. All 8 of them, by the way, I think I didn't say this in the intro, but I feel all 8 of these are good options to live off of forever. So I think these are safe enough. They have that magic distribution range of between 10 and 15%, where you could pull out all the dividends and your capital should remain more or less stable, because the yield equals to pretty much the average market return. That's a clear sign. So that's HYLD, HYLD. The next one is a very, very similar ETF, USCL from Global X Canada. This is literally the S&P 500 with covered calls and 25% leverage. So if you look, if you do a chart between HYLD and USCL, it's very, very similar, if not identical. They have same leverage, same management fee of 65 basis points, you could say. It's tracking the same index, the S&P 500, so obviously you're going to have very, very similar performance. This one is not hedged, though. There is no, it's not Canadian currency hedge. And by the way, I recently did a in-depth Q&A with the portfolio managers of Global X, so make sure to check out if you're interested in these ETFs, the Global X ones, which I love as well. It's important to see. You could see the face, and they would go very in depth about the option strategy. So USCL, definitely part of the Great 8, of course. Remember, guys, you're investing in HYLD, USCL. It's pretty much the S&P 500. It's automatic diversification. Next one is, of course, QQCL. So this is pretty much one of my favorite indexes of all time. I love the S&P 500, but I think I love the NASDAQ 100 better. This is the NASDAQ 100 Covered Call ETF enhanced, of course, from Global X. So it's basically the NASDAQ 100 with 25% leverage, with covered calls. Again, this is going to be, by the way, out of the Great 8, the highest yielding one. It's typically in the 13s instead of the 12s. That's because there's more volatility on the NASDAQ 100, so you could get more income, more premium, more call premiums, right, or richer. So this one is basically the exact same thing, the same strategy as USCL, except it's on a different index. It's on the NASDAQ 100 index, which is, there's a lot of overlap in terms of companies between S&P 500 and NASDAQ 100, but this is only top 100 non-financial companies listed on the NASDAQ. So it's more technology focused. So, I come from the technology background. I'm very bullish long-term on technology stocks. I think in the future, we're going to need more technology, not less. So obviously, I really, really love this index and the sector, but it's only 55% technology. It's not full technology. It's not like you're buying a technology only ETF here. This is why I like it. So NASDAQ 100 index-based covered call ETF with a bit of leverage. Management fees a little higher though than 65 basis points. It's 85 basis points, but this one, you would compare it to the index like a ZNQ or QQC in Canada, which is just passive index NASDAQ 100. It's actually, last I checked, it's actually on par, and sometimes, it could vary day to day, beating also the NASDAQ 100 index, which is absolutely incredible. So obviously phenomenal performance here. So obviously, I have to admit that these first 3 are definitely my favorite. I own all of them myself. They're definitely 3 of the biggest positions in my personal portfolio. What they have in common is they pretty much follow a US index, S&P 500 or NASDAQ 100. They're all leveraged 25%. They all have very similar management fees, 65 basis points, 65 and 85. Monthly distributions, very, very stable monthly distributions. Now, well, that's the first 3 where you could really have, you could consider them your core US exposure. Now moving on to the next ones, the next 2, which I feel are kind of hybrids. There's a bit of Canada in there, so it's like Canada and US. So the next one is, of course, HYLD's twin brother, twin sister, HDIV, which just passed its 3-year anniversary. So this is very unique for a few reasons. One, it's a hybrid between Canada and US. It's actually about 70% Canada, 30% US. So out of all 8 of them, this is going to be the most Canadian focused one. So if you scroll down to what it has, again, this one, just like HYLD, completed its changes. So it's all Hamilton ETFs inside of it. So you see the ETFs here. So it has more of a Canadian asset allocation or sector allocation. So heavier on the financials and energy. You could actually see the breakdown here. But I really like the fact that it's not pure Canada. There's also some US in there. So you could see there's some technology, in there. There's some healthcare. These are pretty much sectors that are very, very underrepresented, if not non-existent in Canada. So, it has a lot of the same ETFs that HYLD has, like QMAX, and LMAX, et cetera, RMAX, a little bit of real estate. Another thing that makes this ETF very, very unique, everyone, is that it's not a pure covered call income ETF. There's actually a bit of growth here. So you'll notice that HFIN and HUTS, these are leveraged, but they're non-covered call ETFs. So HFIN is very similar in terms of the stocks it has compared, with HMAX. So HMAX is kind of like the Canadian Financials covered call ETF, the yield maximizer, but you have HFIN, which has no covered calls. You have UMAX, which is the Canadian Utilities covered call ETF, but then you have HUTS, which has no covered calls, similar stocks, but no covered calls. So there's actually a bit of growth in here. It's like if I remember correctly, about 18 to 20% growth and 82% income. So a very, very unique hybrid ETF, Canada and US, income and growth. Obviously, it has a phenomenal track record. It's the ETF that's been around the longest out of all of them, 3+ years. This one tracks, the index it tracks is the TSX 60 because it's more Canadian focused, and you could see it's actually destroying XIU or the S&P TSX 60 index. But of course, remember, there is some US in here, which has obviously helped the performance because we know that US stocks, the US market typically outperforms the Canadian stocks and Canadian market long term. So another phenomenal choice here. Number 5 is HDIF. So this is Harvest's all-in-one 100% stocks, 100% equity here, covered call ETF solution. So this is basically a collection of all the Harvest. I think it has all of them, almost all of them. I think just the energy one it doesn't have, but it has some energy in here. So here's the list basically. So you have mostly all of Harvest's covered call ETFs put together in one package with 25% leverage. We know that, and this is 100% equity, 100% stock. So we know that Harvest is known for their very, very reliable and consistent distributions. So this one has been around since 2022. It's never reduced their distribution. It actually raised it a little bit starting in July of this year. So the yield is a little bit on the lower side compared to the other ones. But this is something that Harvest says it is done on purpose. They really want to provide. They're not the highest paying, like Michael Kovac says, but they really want you to feel comfortable. They're more into the consistency and the reliability. So HDIF, another one part of the Grade 8 that's doing well. That again, all of these have monthly distributions. They're all leveraged, and they all have similar management fees. So HDIF, another one on the list. So which I also considered a bit of a hybrid, because if you look at the portfolio, you have the breakdown here, very, very, very well diversified. But this one also, just like HDIV, it's fully income, however. Not unlike HDIV, which has a little bit of growth. So this one has a lot of US, mostly US, but it also has some Canada. You see here that the first ETF, HLIF, is exclusively Canada. That's 17.8% of the portfolio, and it's 17.8% on 125%. So it's something like 15% is Canada. You got brand leaders, healthcare, which are pretty much all in the US. Global utilities. So in this global utilities, you have not only US, but you have things outside of the US and Canada as well. So there's some stuff in Europe in there. US banks, all US. Tech achievers, all US. Travel and leisure, a little bit of Canada. I think Air Canada is in there, but it's mostly US. Industrial, mostly US. And then you also have a tiny bit in North American. I think there's US in there too, but it's mostly REITs outside of Canada, basically global REITs. So this is another one where I would consider a hybrid between Canada and the US. Also some global exposure as well. So that is HDIF is definitely part of the Grade 8, number 5. Now the next two are very unique that they actually have some fixed income. Whereas, so these are the only two that have fixed income in here. So there's HBIE. So this is actually very similar style to HDIF, whereas it's kind of a Harvest all-in-one solution. It's got just other Harvest ETFs in here. It's got 25% leverage as well. But this is actually 60%. They're trying to do a 60% stocks, 60% equity mix, and 20% fixed income mix. So This out of all of them will probably be the least volatile in terms of what the assets hold. It's the one that has the most fixed income exposure at 40%. So we know that the 60-40 split is very classic. So if, this is maybe an ETF for someone who's a bit newer, who really wants lower volatility, who's a bit more scared and wants fixed income in their portfolio, if we check out the portfolio, you'll see the breakdown. So this is the equity ETFs, which makes up about 60%. But if you scroll down, they have fixed income, covered call and non-covered call ETFs as well. So they have mostly U.S. government bonds, medium term, long term, with covered calls. And then there's also some more short, very, very safe short, even provincial government bonds and Canadian government bonds as well. So this is really going to be the one, I would say, out of the 8, everyone, that's going to have the least volatility. That's going to be the safest in terms of asset class allocation, because it has 60% stocks, 40% in fixed income. But of course, that is going to lead to a bit lower distribution. So this one has slightly less than HDIF. So it's actually in the 9s, I believe, right now. But definitely part of the grade 8. Definitely one that you could buy and hold forever. Next one is BMAX. So this is BMAX is all in one. What's unique about this one is it's not all equity. There's a fixed income in here. We'll look at it in a second. But another thing is it's the only one out of all 8 of them that is using 33% leverage instead of 25. So slightly higher leverage. You see that here. Slightly higher leverage, but it's not that much more of a risk, between 25 and 33. It's just slightly more. But the fact that it has fixed income, about 25% in fixed income, makes it safer. So I would put this more in the same category as HBIE. It's definitely one of the safest, more lower volatile ones out of the grade 8. If we look at the breakdown, you'll have a collection of Brompton's covered call ETFs, which we know are a little bit more growth oriented than income oriented. They do take a total return more of approach than an income first approach. So you'll see that they're technology, financials, global dividend, real assets, low volatility, healthcare. So a lot of lower risk assets, a little bit more skewed towards more stable dividend stocks here. A little bit exposure to Europe as well in this one, 10% here, but 25% is in fixed income assets. So 15 is going to be in a ETF, which they manage, that focuses on preferred shares, and 10% in the very popular SPLT, which you guys know is I find is a really good cash alternative ETF, which focuses on all the preferred split share funds in Canada. So again, this one's going to have very, lower volatility. Of course, this is my opinion. This is a bit lower risk. And of course, the distribution is also a little bit lower. It's slightly under 10. But they've increased the distribution twice already. Started at 10 cents and then went to 10.4. Now it's at 11.5. So total returns are really, really good on this one as well. So BMAX, a great one to consider if you want a little bit lower risk, if you want some fixed income in your portfolio. But again, another one you could buy and hold and live off of forever. Last but definitely not least is what I like to call the all-in-ones of all-in-ones. It's EQCL. So this is kind of like an income version of an XEQT, HEQT, ZEQT, XEQT, VEQT, all the EQTs, right? So this one is pretty much an income version of that. We know that those ETFs are basically collection of index ETFs that gives you access to the best stocks, the big cap stocks all around the world. So this is actually the one that's the most diversified in terms of geography. This is going to have global exposure. And what they do is it's just an ETF that holds other global X ETFs, including the S&P 500 one, which is literally USCL, the NASDAQ 100 one, which is literally QQCC. Well, the non-leveraged versions, I guess. Right, QQCL is the L is leveraged versions, and if you just change the L to the C, it's the non-leveraged version. But if you do, you calculate add up all the percentages, it's 125%, because this is leveraged 25%. They actually have EQCC as well, which is non-leveraged, but in this video we're only doing the enhanced, slightly leveraged ones, which I feel are the best thing if you're gonna, hold forever. So you basically have a mix that focuses mostly on the US, but there's 24% in Canada, there's 30% in Europe and Japan, Australia, etc., and there's even a little bit in the emerging market. So this is really, if you only want one ETF, you want the whole world, all the best stocks all around the world with one ETF, this is kind of an income version of that. Nice approximate 12% yield. very consistent distribution. So this is definitely another one that you could buy and hold forever. Definitely probably the most diversified ones out of all 8 of them because you have stocks all around the world. But it is 100% equity as well. So that's the grade 8, everyone. Tell me what you think. Now, I do have to do some honorable mentions. You'll notice some of them are not there that I didn't include. So 2 really important ones that I also feel could be part of the grade 8 and could have been the grade 10. I did decide to make the grade 8 just ETFs, but there are 2 closed-end funds and a split, 2 closed-end funds in Canada, which I feel could be buy and hold forever positions because they're diversified, they're income focused, they're a little bit leveraged, they have monthly distributions, they have a good history, et cetera, et cetera. So of course, the first one is the Canoe EIT Income Fund. This is legendary. It's the compound returns have been amazing. The last 10 years, 11% plus on average. So it's really, really good. This one is, I would consider in terms of like a hybrid between Canada and US. It's about 50% Canada right now, 50% US. And it basically has big cap blue chip dividend growth stocks. Here's the current top 25 stocks. These guys are really, really good stock pickers. I wouldn't say this, covered calls is, I don't even think they do covered calls on this. It's leveraged 20%, but it's not a covered call strategy. This is more of a growth strategy. So this is a unique one where it could be a growth and an income ETF at the same time. But performance is really, really good. Yields at about 9.5% now, I believe. And another one where I could consider part of the grade 8 would be GDV. So this is, you guys know that I own this one as a core position myself. So this could definitely be considered as a buy and hold forever core position. But, it is a split share fund, comes with a little bit more complications. But if you understand them, it could definitely be one. Fantastic, fantastic diversification. This focuses on dividend stocks that grow their dividend. That's why it's called dividend growth all around the world. And that's why there's global, hence global dividend growth split corp. So you can check out the portfolio here. You'll recognize a lot of the stocks. 70% are stocks in the US. There's about 9% Canada, and the rest is across Europe mostly. So absolutely phenomenal performance, especially in the last year. This is the net asset value, the NAV performance. I really strongly suspect, this is my opinion, that it's never going to miss a dividend. You see the unit NAV is well over $15 threshold for it to pay out the dividend. It's done really, really, really well. It's well managed. It's actually trading at a small discount right now. You see that it's worth $11.37, but you could buy some shares for $10.78 as of September 30th. And I don't know why, but I guess maybe they're updating their site. But EIT typically trades at a discount as well. But the NAV prices, I guess, are not up. No, they're updating them now. That's why they're blank here. But these 2 I could definitely consider as, honorable mentions as part of the grade 8 as well. And I did decide to exclude CNCL, but CNCL, which is the TSX 60 with covered calls with 25% leverage, I guess you could consider it as well as a core foundational position. There's also EACL and EMCL, but I think instead of these 3, I if you really want more global exposure, I also think that just getting Canada alone, you're better off either mixing in with some US or getting more US. You guys know how I feel about that. So I'll mention these 3, but I think you'll just be better off with EQCL, which literally includes those 3 as well, right? So the 3 that we just saw are here, and here, plus, of course, the USCC and the QQCC. So I just think you'll be better off here, but I guess I had to mention those as well. I wouldn't consider them honorable mentions, but mentions, I do think GDV and EIT are honorable mentions. So those are really the grade 8 or the grade 10, if you will. And again, guys, this is just my opinion, but these are 8 income-oriented covered call ETFs that all use leverage, that all have very high-quality stocks, that all have consistent distributions, yields between 9.5 to 13. I think you could live off of them forever. That's just my opinion. Again, you guys know I own, a lot of these, or have owned them in the past. All fantastic building blocks for an income portfolio. So guys, hit the thumbs up button if this video was informative for you. Would you like me to do the exact same thing, but cover the non-leveraged income-oriented funds on the Canadian stock market? If I get at least 500 likes, I'll do that video. I would appreciate it. I know many of you forget, but hit that thumbs up. It really helps me, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.